Let's dive right in. Look, this is not just another tech trend we're talking about. This is a fundamental shift in how business is done, and it's happening right now. Humanoid robots are putting companies at a massive crossroads, maybe the most important one they'll ever face. Get on board with this technology, or you risk getting left in the dust for good. And this quote, well, it just gets right to the heart of it, doesn't it? This whole thing is being framed not as some nice little opportunity, but as a full-blown, unavoidable arms race. Seriously, it's not about getting a small leg up on the competition. It's about simply staying in the game. The very first company in any industry to make this move is going to set off a chain reaction, a domino effect that forces everybody else to either adapt or become a fossil. So, if you're an executive, how are you supposed to even think about this? Well, the experts are saying you shouldn't treat this like just buying new equipment. No, you should see it as a call option. Basically, you're buying a ticket that secures your company's very survival. It's all about locking in your spot in the future, starting today. Now, here's where it gets really interesting, because it's all about urgency. Even if a factory is pumping out 1 million robots a year, that's being called a drop in the bucket compared to what the global demand is going to be. This is going to create a massive supply crunch. So imagine this. Your competitor gets their order in first, and suddenly you're stuck on a 3-year waiting list while they are completely rewriting the rules of your market. It's exactly like trying to get tickets to a sold-out concert after the band's already on stage. Okay, let's get into the core economics of this, because this is how it all starts to build. This isn't just some hypothetical advantage we're talking about. The numbers themselves reveal this disruptive new math for the cost of labor that just changes everything. So here's the key thing to get your head around. An employee's hourly wage, that's only part of the story. It's just the tip of the iceberg. When you start adding in things like benefits, payroll taxes, insurance, all that overhead, that $15 an hour job is actually costing the company closer to $22 an hour. And of course, that number just climbs for higher skilled jobs. You have to understand this baseline before the savings really blow your mind. And this right here just brilliantly shows the raw financial power of this shift. The whole analysis boils down to this incredibly simple but powerful rule of thumb. Check this out. If you pay someone $15 an hour, you save roughly $15 an hour with a robot. You pay them $40, you save about $40. It is a direct one-for-one replacement of your single biggest expense. It's that simple. And when you zoom out and look at it over a decade, the numbers just become absolutely staggering. A single robot taking over a 15-an-hour role saves a company over $600,000. For, say, a $40 an hour factory worker, that number jumps to over $1.6 million. And the key to all this, the magic ingredient, it's the assumption that one bot can work around the clock, 24/7, effectively replacing 3 human shifts. That's the multiplier. Okay, so that's the theory. Now, let's apply this new math to some of the biggest companies you know and see what happens. Because this is where the rubber meets the road. This is where we start to see a really clear line being drawn between who's going to win and who's going to lose. Let's take a giant, a behemoth like Walmart. They have over 2 million employees. You might think, okay, it would take a massive, expensive overhaul to really make a dent. But look at these numbers. Replacing just 1% of their workforce, a teeny tiny fraction, with about 6,000 robots, could boost their bottom line by over $833 million a year. A year. That is not a small tweak. That's like finding a giant pile of cash just sitting there. And this chart really shows you just how profound this could be. For these huge retailers, doubling their entire pre-tax income is actually within reach, just by replacing a fraction of their workforce. Walmart could pull it off by automating 35% of its jobs. For Kroger, which has even higher labor costs, it's only 20%. This technology could literally rewrite their entire financial story. Now let's switch gears to logistics. For a company like UPS, the story is even more dramatic. I mean, look at this. Labor isn't just an expense, it is the expense. Compensation and benefits make up a mind-boggling 57% of their total quarterly revenue. Think about that. More than half of every single dollar that comes in the door goes right back out to pay their people. So, what would it take to double UPS's annual profit? Just $1.3 billion in savings. Now, I know that sounds like a ton of money, but remember that last slide? That number is just a tiny slice, about 10% of their total yearly labor cost. For them, a relatively small efficiency gain in their biggest cost center leads to a 100% jump in profitability. It's incredible leverage. And for manufacturers, the game changes again. The advantage isn't just about saving money. It's about scaling, and scaling fast. So instead of replacing existing workers, what if a company like Tesla used robots to, say, double a factory's output? Well, the analysis shows this could triple that factory's net income. This is a strategic weapon. It's about building more, faster, and cheaper than any competitor could ever hope to. But while these financial numbers are absolutely jaw-dropping, they are, believe it or not, only the beginning. The operational advantages of having a robotic workforce are just as, if not more, profound. Just look at this list. I mean, come on. A robot workforce is never late, never sick, and it never quits. That alone eliminates billions in turnover costs. You have no HR disputes, no strikes, no theft. Training is instant. If one robot learns a new task, they all learn it at the same time. The quality of work is perfectly consistent every single time. They work 24/7. This slide just perfectly lays out how robots solve pretty much every hidden cost and headache that comes with managing a large group of humans. Okay, now let's zoom all the way out. Let's go to the 30,000-foot view. Because when you combine this labor revolution with a couple other key technologies, you don't just change one company's balance sheet. You change the entire global economy. So the sources point to these three huge forces of deflation, all working together. First, you've got near-zero labor costs, thanks to humanoid robots. Second, near-zero transportation costs from autonomous trucks and robotaxis. And third, near-zero energy costs from solar and battery storage. So, when the cost to make something, move something, and power something all start approaching zero, well, the prices of everything start to fall off a cliff. And what does that actually mean for you and me? Well, it means the cost of living just plummets. This quote makes it so real. A banana that costs you $1 today could one day cost 50 cents, or maybe even just 10 cents. This is the ultimate prize at the end of all this technological change. A world of unbelievable abundance, where everyday things are just radically more affordable for everyone. Which, of course, brings us all the way back to the beginning. We've seen the economics, the strategic firepower, and the world-changing potential. But at the end of the day, it all comes back to this one really urgent question. In a race where the winner can scale faster, operate cheaper, and out-innovate everybody else, what happens if you get left at the starting line? It's a thought that every single business leader out there should probably be losing a little sleep over right now.